Hey everyone, it's Jason and welcome back to Financial Growth TV. Please hit the subscribe button. Our tips for today is how to start investing with small amounts, preparing for bigger opportunities. You don't need a ton of cash to start investing. Those Lambos in my driveway, they weren't bought overnight with some get-rich-quick scheme. It all started with small, consistent investments, and that's what we're diving into today. So buckle up, smash that like button, and let's get you on the road to financial freedom. Let's kick things off with micro-investing apps. Think about it. How much spare change do you waste daily? A few cents here, a dollar there? Acorns, Stash, Robinhood, these apps round up your purchases to the nearest dollar, investing that difference automatically. Buy a coffee for $3.50, the app rounds it up to $4, and that extra 50 cents goes into your investment portfolio. The point is to build the habit of investing, to make it automatic. Plus, these apps offer features like recurring investments, even if it's just $5 or $10. Consistency is key, and these apps make it simple to stay consistent. Maybe you want to invest but don't have time to research stocks and bonds. Robo-advisors might be your new best friend. They use algorithms and your financial goals to build and manage a diversified portfolio for you. Answer a few questions about your risk tolerance and investment timeline, and the robots take it from there. Major players include Betterment, Wealthfront, and Vanguard. Robo-advisors take the guesswork out of investing, rebalancing your portfolio automatically and reinvesting dividends. It's like having a personal financial advisor, but without the hefty fees. Ever wanted to own a piece of Amazon, Tesla, or Apple, but thought those stocks were too expensive? Fractional shares are here to shatter those barriers. You can buy a portion of a share of stock, even if you can't afford the full price. Instead of shelling out thousands for a single share, you can snag a fraction for $50 or even $10. This opens up a world of possibilities, especially for those not swimming in cash. Several brokers now offer fractional shares, including Fidelity, Schwab, and Robinhood. Let's talk about something that's basically free money employer-sponsored retirement plans. If your employer offers a 401(k) or a similar plan and you're not contributing, you're missing out big time. Many employers offer a matching contribution up to a certain percentage of your salary. If they match 5% of your contributions and you contribute 5%, you're essentially doubling your money right off the bat. Even if you can only afford to contribute a small amount each month, do it. It's better to have something saved than nothing at all. Plus, your contributions are typically tax deductible, which means you'll save money come tax season. High-interest savings accounts and certificates of deposit (CDs) are crucial for a balanced investment strategy. Think of these options as the safe haven for your money. Unlike the stock market, savings accounts and CDs offer a guaranteed return. High-yield savings accounts typically offer interest rates significantly higher than traditional savings accounts. With CDs, you commit to keeping your money invested for a fixed period in exchange for a higher interest rate. Online banks often offer more competitive rates than traditional banks. Let's talk about the most important investment you can make: investing in yourself. The best investment is in yourself, especially when starting with small amounts. What's the one thing that can consistently generate income and increase your earning potential? Your skills and knowledge. There are countless free or affordable resources available online and in your local community. Learn new skills, master your craft, and become an expert in your field. The more valuable you are, the more you can earn. So there you have it, folks. Starting small doesn't mean you can't achieve big things. By using these practical tools and platforms, you can begin your investing journey today, even with just a few dollars. The key is consistency and learning as you go. Don't be afraid to make mistakes. That's how you learn and grow. Now, I want to hear from you. Have you tried any of these methods? Share your experience in the comments below, and don't forget to subscribe to Financial Growth TV for more practical investing tips. Until next time, stay wealthy.